So, how do dependents, i.e., children or another adult that doesn't work, affect mortgage affordability? This is a question I got asked by a subscriber in the comments, and I'm going to answer this by showing you a live example with a lender. So, here on the screen, we've got two applicants applying, so it could be you and your wife, or of course, you and your husband. We're going to start with no dependents. I've done a purchase price of £300,000, 10% deposit, so you're borrowing £270,000 and you'll put in a deposit of £30,000. Doing a 30-year mortgage term, so we've done applicant one has got annual income, a basic salary of £25,000 and overtime annually of £6,000. Applicant two has got a £30,000 basic salary. For now, we're leaving the outgoings blank. Now, the lenders do take national averages for most of the things like food, bills, etc. But if you've got any loans or credit cards, we'd be putting them in here. Here, what we'll do is put calculate. So you can see here, the loan is affordable. You could get just a bit over £270,000. Now, if we just add in, let's say you've got two children and leave everything else the same, then you can see this number here has dropped slightly. So this is for a 2-year or 3-year fixed product. With a 5-year fixed product, the loan amount stays the same. So you can see there, just adding the two children in on with those salaries, that term length, it doesn't affect things too much. It's important to mention here, if the term length was a lot shorter, then this might have a larger effect because this can actually reduce the affordability due to the payments being more expensive. If we add an extra child in, so if you've got 3 or more children, it's still the same. So that's fine. What you'll notice is if you start putting in other commitments, then this will start to knock it down. So you see here, this number's dropped quite considerably now. So you're nowhere near kind of buying up to a £300,000 property on a 2 or a 3-year fixed product. But with the 5-year fixed product, still is completely possible, which is great. Of course, if you then had £5,000 on a credit card, and let's say you've got a car that you own or that you're leasing that's 350 quid a month, I'd expect this number to drop, and there you go, it has. So you can see with the commitments and the dependents, it can make a massive difference. But let's have a look. If we took out those 3 children, let's say you don't have any kids, how does that affect it? So you can see now that number has jumped back up to the number that we need, even with these commitments. So you can see it does have an effect, but of course, when it comes to mortgage affordability, a lot of people can view it as we want to get the maximum we possibly can, which is great, right? We want to make sure we get you a property that you're going to be comfortable in, that you're going to like. But there's two sides to affordability. The first is the lender. What will the lender actually give you, which is the example I'm giving you on the screen. The second, and to be honest, the most important, is making sure that you can afford it, of course, right? You're going to have to pay this mortgage every month. The last thing we want is for you to move into the property and be buried down with this monthly payment and burdened, and you won't be able to do anything else. So there are two sides to this, and of course we want to maximize affordability, but we need to do it the right way. One of those ways, we can increase the term length, which can help. Again, the important thing with that is that we're thinking long term. So if we're going to increase the term length, how are you going to continue to pay the mortgage that late on, right? So these are all the important factors, but yes, having dependents does affect mortgage affordability. Not always though, as you've seen in the examples on the screen, sometimes the loan amount will be exactly the same. This is what I'm here for, is to help my clients through this process. I've shown you one lender on the screen, but there are plenty of other lenders and their calculations change. Some lenders, credit commitments make less of a difference. Some lenders, dependents make less of a difference. Hopefully you found that helpful. Of course, any other questions, anything else you need, drop them in the comments section below. I'm going to link another video here on the screen as well that I think you'll like, as long as you liked this video, of course. It's called Everything That You Need to Know to Buy Your First Home here in the UK. It is a step-by-step guide. It's a fantastic video. So if you've got a bit of time, sit down, maybe with your dinner, give it a watch. Might not be as good as watching a movie, but I'd like to say it's got some good information in there. So hopefully you enjoy. Anything else you need, drop it in the comments section below, and I'll see you in the next video.